As we step into 2026, thousands of single pensioners across Australia are finding themselves at a critical crossroads, uncertain about the financial support they're entitled to receive from the government. The landscape of retirement benefits has shifted once again, bringing with it updated payment schedules, modified eligibility requirements, and adjusted financial thresholds that could mean the difference between comfortable living and financial hardship. Right now, at this very moment, you might be unknowingly missing out on significant amounts of money that rightfully belongs in your account simply because you're not fully aware of what the current system offers or how recent changes might actually work in your favor. The complexity of the Australian pension system can feel overwhelming, especially when information seems to change constantly and conflicting reports circulate through social media and community conversations, leaving many seniors feeling anxious, confused, and worried about their financial security in the months ahead. Welcome to our channel, a dedicated resource specifically created for Australian seniors who deserve clear, straightforward explanations about pension entitlements, government support programs, and financial benefits without the confusing jargon or complicated terminology that government websites often use. Our mission centers on breaking down complex pension regulations, payment structures, and eligibility criteria into simple, digestible Australian English that makes sense to everyday people who just want to understand what they're entitled to and how to access it. We consistently upload comprehensive videos covering the latest updates, policy changes, and beneficial programs available to retirees throughout Australia, ensuring you never miss critical information that could positively impact your financial well-being. This channel exists because we believe every Australian senior deserves to live with dignity, financial security, and peace of mind, knowing they're receiving every dollar and every benefit the government provides for people who have contributed to this nation throughout their working lives. The reality facing single pensioners in Australia today cannot be understated, as many are genuinely struggling to make ends meet while living solely on the age pension, which despite recent increases, still leaves countless seniors making difficult choices between essential medications, nutritious food, adequate heating or cooling, and other basic necessities that should never be considered luxuries. The cost of living crisis has hit retirees particularly hard, with electricity bills climbing to unprecedented levels, grocery prices continuing their relentless upward march, and rental costs in many areas becoming absolutely prohibitive for those on fixed incomes. Many single pensioners face the additional challenge of social isolation, which compounds financial stress and makes it even more difficult to stay informed about available support services and benefit programs. These are not just statistics or numbers on a government spreadsheet, but real people who worked hard throughout their lives, paid their taxes, raised families, and contributed to building this country, now finding themselves in situations where every dollar must be carefully counted and stretched to its absolute limit. Understanding your current payment entitlements forms the foundation of financial planning as a single pensioner moving through 2026, and the figures you need to know are based on the indexation adjustments that took effect in September 2025, which will remain in place until the next scheduled increase arrives in March 2026. A single individual receiving the full age pension can now expect approximately $1,178 deposited into their account every fortnight, an amount that includes not just the base pension payment but also the pension supplement and energy supplement, both of which are automatically calculated and included without requiring separate applications or additional paperwork. When you calculate this across an entire year, it amounts to roughly $30,000 in annual income for those qualifying for the maximum payment rate. However, it's absolutely crucial to understand that not every single pensioner receives this full amount, and the variation in payments doesn't indicate any wrongdoing or error on your part, but rather reflects how the government's means testing system operates to distribute pension payments based on individual financial circumstances. The Australian government employs two distinct assessment methods called the income test and the asset test, applying both calculations to every pensioner's situation and then paying whichever result produces the higher pension amount for you. The income test examines all regular income sources flowing into your possession, including wages from any part-time employment, payments from superannuation income streams, interest earned from savings accounts, dividends from share investments, and rental income from investment properties. Single pensioners are permitted to earn a modest amount before their pension begins reducing, with this protected threshold sitting just above $200 per fortnight in 2026, meaning income below this level doesn't affect your pension payment at all. The confusing aspect for many pensioners involves how Centrelink calculates income from your savings and investments through a process called deeming, where the government assumes your money generates a predetermined rate of return regardless of what you actually earn. two separate deeming rates apply, with a lower percentage applied to smaller savings amounts and a higher percentage used for larger balances, and these rates increased during late 2025, continuing into 2026, potentially causing some pensioners with substantial savings to notice slightly reduced pension payments even when their actual bank interest hasn't changed significantly. The asset test frequently proves more impactful for single pensioners than the income test, as it evaluates the total value of everything you own rather than focusing solely on income generation. This comprehensive assessment includes cash held in bank accounts, shares, and managed fund investments, investment properties beyond your primary residence, vehicles, boats, caravans, and other valuable possessions, though notably your family home receives complete exemption from asset calculations provided it serves as your principal place of residence. Homeowners who are single pensioners can possess just over $320,000 in assessable assets while still qualifying for the full pension rate as 2026 progresses, but once your asset value exceeds this threshold, your pension payment gradually decreases according to a set formula. The pension cuts off entirely when assessable assets surpass approximately $700,000 for single homeowners. Non-homeowners receive considerably higher asset thresholds in recognition that renters require additional savings to manage ongoing housing expenses that homeowners don't face, though the same principle applies where increasing assets above the threshold result in correspondingly lower pension payments. Age eligibility requirements remain unchanged for 2026, with the age pension qualifying age now permanently set at 67 years for anyone born on or after January 1 St. 1957, and no further increases are currently scheduled or being considered by the government. Current age pension recipients need not worry about this requirement affecting their existing payments, as age eligibility only applies when initially qualifying for the pension. Indexation continues playing a vital role in protecting pension payments from inflation's erosive effects, with the government conducting reviews twice annually in March and September to adjust payment rates, income limits, and asset thresholds upward in line with wage growth and cost of living increases. While individual indexation increases might appear modest, their cumulative effect over time helps ensure your pension maintains reasonable purchasing power despite the ongoing rise in living costs that affects everything from groceries to utilities to medical expenses. The Work Bonus Scheme continues operating throughout 2026, providing valuable assistance to single pensioners who are physically able and willing to supplement their pension income through casual or part-time employment. This beneficial program allows you to earn additional income from work without immediately reducing your pension payment, as a portion of your work earnings each fortnight receives exemption from the income test calculations. Unused work bonus amounts accumulate as a balance that you can draw upon in future periods when your work income might be higher, making employment considerably more financially rewarding than it would be if every dollar earned immediately reduced your pension. This initiative recognizes that many seniors possess valuable skills, experience, and knowledge that can continue benefiting the workforce while also improving their personal financial position. Even individuals whose income or assets disqualify them from receiving age pension payments might still access valuable support through the Commonwealth Seniors Health Card, which has recently expanded with increased income limits allowing more self-funded retirees to qualify. This card delivers significant savings on prescription medications under the Pharmaceutical Benefits Scheme, bulk billing access for medical appointments, and various discounts on services and utilities. Beyond the age pension and Commonwealth Seniors Health Card, numerous other Australian government programs exist specifically designed to support seniors facing financial hardship or requiring additional assistance. The Rent Assistance Program provides extra fortnightly payments to eligible pensioners who rent their homes, helping offset the substantial burden that rental costs impose on fixed incomes. The Energy Supplement, while included in standard pension payments, can sometimes be accessed separately by certain seniors not receiving the full pension. Many states and territories offer additional concession schemes covering council rates, water bills, vehicle registration, public transport, and energy costs, with eligibility often tied to holding a pensioner concession card issued when you receive the age pension. The pension supplement represents another crucial component of support, automatically paid to age pensioners to help cover specific expenses including telephone services and certain utilities, recognizing that staying connected and maintaining basic services shouldn't be luxury items for Australian seniors. Pensioners facing urgent financial hardship can apply for advance payments of their age pension, allowing access to future pension amounts during genuine emergencies, though this money must eventually be repaid through reduced future pension payments. The pension loan scheme offers another option for homeowners seeking to boost their retirement income by allowing eligible seniors to receive voluntary fortnightly loan payments from the government secured against their home equity, which only needs repayment when the home is eventually sold. Healthcare remains a major expense for aging Australians, but Medicare continues providing essential medical services at minimal or no cost, while the Pharmaceutical Benefit Scheme ensures prescription medications remain affordable even for those requiring multiple daily medications to manage chronic conditions. Seniors experiencing financial crisis situations can sometimes access emergency relief payments through various government and community programs designed to prevent homelessness, disconnection of essential services, or inability to afford food and medications. The Home Care Packages program assists seniors who wish to remain living independently in their own homes despite requiring support with daily activities, cleaning, personal care, or minor home modifications, with subsidized packages available based on assessed need and financial circumstances. The National Disability Insurance Scheme, while primarily focused on younger Australians with disabilities, can sometimes provide support for seniors whose disabilities began before age 65. Keeping your Centrelink information current and accurate remains absolutely essential, as unreported changes in your circumstances might result in overpayments requiring repayment or underpayments leaving money unclaimed that should rightfully be yours. The truth about 2026 pension updates is far less dramatic than alarming social media headlines might suggest, with no sudden cancellations, no secret cuts, and no radical overhauls requiring panic or drastic action. Payment rates have increased compared to previous years through regular indexation, eligibility thresholds have risen protecting more pensioners, and the fundamental structure of the age pension remains intact and stable. Some pensioners with significant savings might notice modest reductions due to increased deeming rates, but these changes affect assumed rather than actual income, and Centrelink's practice of applying whichever test produces the higher pension payment provides important protection. Staying informed about your entitlements, understanding how the system actually operates rather than relying on rumors or incomplete information, and maintaining open communication with Centrelink positions you to navigate 2026 with confidence rather than confusion. You have worked hard throughout your life, contributed to building this nation, and earned the right to retire with dignity and financial security, which means claiming every benefit, every supplement, and every dollar of support that Australian law provides for seniors in your situation. The pension system exists specifically to support people like you, and understanding these rules empowers you to make informed decisions, reduce unnecessary stress, and plan your future knowing exactly where you stand financially as we move through 2026 and beyond.